Hi everyone, hope you guys all having a great day today. And in terms of this video, I'm going to go over the overall market because the CPI numbers came out and they're higher than expected. For example, the CPI year over year for March previously was 3.2, and then they were expecting 3.4, but it came at 3.5, so higher than expected. That's significant because it will affect interest rate cuts. And I'm going to go over that as well. But before I do that, and then another thing you have to look out for is today, there's additional things I covered in yesterday's video, but predominantly, in my opinion, 2 p.m. minutes of Fed March FOMC meeting. That is, again, at 2 p.m. today. I'm going to go over the 10-year Treasury yield, which is sitting at 4.509%, so higher than yesterday. Crude oil is at $85.48 per barrel. Gold's at $2,357.60. Bitcoin's at $67,699.57. Again, the halving's happening in mid-April. The reason why there's no specific date is based on mining. And then the Federal Reserve interest rate's at 5.33% currently. The reason why I'm covering that is because to touch base on the interest rate cuts in the future. And as in terms of the SP 500, once the CPI numbers came out, showed inflation is not necessarily hypothetically slowing down. So then it took a big nosedive, and we're sitting at the negative 1.59, 1.6%, which is at 5,140 points. Significant drop. I'm going to be going over the SPY, which is basically an ETF for the S&P 500, and going over the S&P 500 in terms of the resistance and support levels as well within the video. And remember, tomorrow we have initial job claims and CPI numbers or PPI numbers coming out, so producer price index. But for the CPI numbers, the reason why it's significant is it will affect interest rate cuts, in my opinion, but I'll go over that soon. In terms of the core CPI month over month for March, previously it was 0.4. They were expecting 0.3, but it came in at 0.4, so technically flat, but higher than expected. Core CPI year over year for March, 3.8 previously, 3.7 expected, but got 3.8. So again, flat, but at the same time higher than expected. Core CPI index CPI year over year for March, again, like I stated earlier, 3.2 was previous, expecting 3.4, but got 3.5. So that's not even flat. It's just overall, it's just higher than expected and higher year over year. So then CPI month over month for March, 4.4, 0.4, expected 0.3, but got 0.4. So not necessarily great because, for example, like yesterday I mentioned, Fed Bostic still this was before the CPI numbers came out, still expects one rate cut in 2024, but doesn't rule out 0 or 2. I think he just mentioned 2 to not have like a shock factor specifically, but I think it's more targeted between either 1 or 0. Going into the year, a lot of people in the market were expecting of quite a few rate cuts, but now we're dwindling down to basically almost nothing for this year. And then Jerome Powell, in a speech delivered at Stanford University at the beginning of April, the Federal Reserve Chair Jay Powell said, if the economy evolves broadly as we expect, most Federal Open Market Committee participants see it as likely to be appropriate to begin lowering the policy rate at some point this year. So for the most part, we're technically not seeing it. So I don't know if necessarily we'll see rate cuts. And at the same time, from interviews from Fed members I've heard recently, they're basically staying in the gray zone in terms of saying yes or no, there'll be rate cuts. So I don't hear too much confidence, but at the same time, they're usually not that transparent leading up to the meetings because they say we'll assess everything based off the information we have and then we'll make a decision, right? So that is usually the nature of their speech. But at the same time, I'm going to go over the S&P 500. So in terms of key levels, I'm going to go over the SPY first. So like last time I showed for the SPY, you could see that essentially in the 5-year chart, we technically do have more room to grow because this dates back into 2010, by the way, staying in this channel for the most part. So you go up, come down, bounce off in this channel, so on and so forth. So we have technically more room to grow, but in the 5-year chart, it shows that at one point we're going to have a pullback, but that is a 5-year chart that's quite long. And then 1-year chart kind of shows a little bit of a recovery, but we have the CPI number that came out today, higher than expected. So in my opinion, that's indicating that there's less rate cuts to happen throughout the year, if not any. And at the same time, we have PPI numbers coming out tomorrow too. So I don't think that's necessarily going to be that great. Now, the question is, what levels are we going to hit if we're going to keep going down? Because right now, for example, for the SPY, we're at negative 1.3 0.5%. And the question is, where are we heading now? Again, we have the PPI numbers, and PPI numbers coming out tomorrow too. So I think it's more, even if we do bounce back up, I think we're going to drop down towards the end of the day as well. And we have at 2 p.m. that Fed meeting as well. So in terms of levels, the next support/resistance level is going to be at $508, $509. Right about here, you can see multiple times resistance, support. And then the next level after that, because again, tomorrow's PPI numbers are coming out. So I think even if we do get a bounce, by the end of the day, we're going to drop down. So in case if we drop down too low, the next key level is at $503, $504. Now, in terms of if everything's doom and gloom for the most part, I think we would be coming back down hypothetically to these levels at one point, and which is going to be at $480, depending on when we drop. If we dropped instantly, obviously it'd be lower, $478, but I think it'd be gradual, and $480, $490, but give or take. But that's a long way to go. I don't think necessarily it would ever be that bad. It would take some time to get to that level, and it would have to break a bunch of support levels on the way anyway. But that's for the SPY, so SPY. And then in terms of S&P 500, right now we're at 5,154 points. And then next key level for the most part, I believe was right about here, 5,110 points. And then if we were to go lower, we'd be going down to 5,047 points. But yeah, so there's that. That's that for this video. And thanks again for watching. Appreciate it. Thanks again for the awesome support. Peace.